Welcome to TMS Insights. It's in the middle of June, Ben, so it's a really busy time in markets. Busy here, but busy in global markets. And one of the things we really want to bring to everybody today was just the scale of what might be coming to public markets in the US and globally, because we've had a period where private markets have had a good run over public markets, and a lot of the chat has been about private market investment. But what's going to hit the boards in the next few months is going to be something, of generational scale.
Absolutely, completely.
And it'll be new to markets and new in the sense of what we're talking about: SpaceX, OpenAI, and Anthropic, and just crazy in the dollar figures. So
it is.
The first one will probably, and we know OpenAI filed actually overnight.
Yeah.
So that listing won't be far away.
Anthropic filed last week.
Last week. So SpaceX is potentially going to IPO even within the next week or fortnight. And that's the behemoth of the three, potentially. I mean, valuations are going to be dependent, but we could be talking in Aussie dollars, $2.5 trillion.
Yeah.
I mean, that is just extraordinary.
Yeah. 8 years ago, the first company in America hit a $1 trillion US market cap, which was Apple. We've got 3 companies that will all float with $1 trillion US market caps, or significantly higher. Yeah. It's extraordinary, particularly when you think, like, if you look at Anthropic, it barely existed a few years ago. It's just the growth is extraordinary. So SpaceX goes first. I think this one's made some headlines because Elon's obviously, he's never done anything normally. You don't get the results you get if you do. And the interesting quirk in the SpaceX float is that it's going to have the highest component of retail investors of any float done of this size in history. They reckon about 40% of investors will be retail. And
we know that it's been offered in this market in Australia, which is really rare at a retail level. I mean, comments, thoughts about that? That worries me somewhat.
When I see, you can look at it, isn't
the Groucho Marx comment, I don't want to be a member of any club I can join. But they're being offered in the local market. That's unusual.
ASIC's put a wrapper around this IPO. And I think it's good that they have done this, because Australians can buy as soon as it starts trading on the market. Of course, you can buy them. So why not go through the IPO? And I think that this is what Musk is so cleverly doing, is he's cutting out a lot of the investment banks. He's the ETFs aren't going to get a lot of stock, and in 2 weeks after the float hits, that's when it will be included in the indexes.
They've changed the rules now
for this.
To enable earlier inclusion or managed inclusion. Let's call it that. So
look, it's what the business is worth you've got to make so many assumptions. I think it's almost impossible. The market ultimately will determine what this business is worth. As we've seen with Tesla, Tesla trades on about 350 times profit. And we can all see that Tesla has multiple parts of its business which could be absolutely ginormous in the future. But as at today, the valuation doesn't make a whole lot of sense. But it also has the highest retail ownership of any of the S&P 500 stocks in Tesla. So, and that's one of the reasons everyone's loyal to Elon and made a lot of people a lot of money over the years. And
definitely.
We'll see. I mean, the other two will be really interesting, I think.
So both LLMs with broad appeal, and both, are they going to cannibalize each other, or is this space so big that you can have multiple winners?
That's I think there will be it looks like there's going to be 3 dominant LLMs, and we've got
OpenAI, Gemini, and Anthropic.
And Meta is
on the way.
They're trying to become a 4th big player. We use AI a lot in our little business these days, and I think what we've seen is that all 3 of those models are very good at different tasks. And it's actually, as at today, there isn't one LLM that you want to just use singly. You know, Aaron here's often got 3 of them going at the same time, and you get very different outputs for the same question across the 3. So that feels like the way it's going. It is an amazing time. Like, I think it is actually a historic
Let's
time.
talk about that, because I mean, without being capable of accurate forecasts of this thing, my view is you can see multiple winners, because the space is growing so fast, and it's like very few times in our lives or in investment markets where you see a major revolution, and this is material. So you don't want to be putting your head in the sand about this, because it's really significant.
Yeah, totally. And look, I think it's a case of, let's see where these come on at, in terms of, you know, we're probably not going to be rushing out to buy these things in IPOs or anything like that. Get a sense of what the market thinks these companies are worth. Start to listen into the quarterlies, as we do with some of the other businesses that we do own. But we can all see the usage is just going like this.
So there's some positive elements in the backdrop to the investment case. I'd expect a lot of volatility.
Completely.
And so it'd be entirely unsuitable for a lot of investors, this kind of thing. But for those who want to saddle into a ride, there's going to be, you know, there's a growth story there. So
there is.
And
the indexes will pick these stocks up, which I think the interesting part is there's a lot of capital that's going into these businesses, and it just feels like, as of Friday night, where we saw a big sell-off in the Nasdaq, really for no specific reason other than a strong jobs report, which is a bit of a leap.
A good thing to talk about too. Keep going on that Nasdaq, because it's had a good run up, a very strong last few months. So this is without these new listings. This is on the back of earnings of the Mag 7 and others, some of the chip stocks, etc. So it's been a really big year to date for the Nasdaq.
I mean, I think in the last couple of months, the Nasdaq's up like 30% or something. So, phenomenal. I mean, it did get sold off leading into that on the back of a run. But the misconception, I think, can be that we're in some sort of AI frothy pricing bubble. The reality is that the earnings are growing as fast as the share prices are. Now, can that continue into the future? That's, I think, for some time it will. Because we're only two and a half years into what most people think will be a decade-long innings. But this is being driven by profit growth. And that's where
it's not margin expansion, it's profit growth. And we've got graphs to show people about this stuff, which is really what we look for. It's encouraging, it's therefore sustainable. And there's,
it's going to be volatile though.
But it will always be volatile. So, and let's talk about that volatility that came out Friday night, jobs report, and this is talking to a broader economic story in the US, as we have had very different perspective here. But that jobs number was really strong.
Incredible. I mean, so the United States created 176,000 new jobs in 1 month. The Wall Street was expecting a number around 70,000. They also revised significantly up the previous months to 170,000 as well. Sam Altman, I saw, spoke at a Commonwealth Bank event last week and said, I expected that the AI job layoffs would be well and truly
underway by now. It's not.
They're not. You know, there's actually, we're seeing the opposite.
And we've talked about it on these videos. That's something that hasn't played out yet.
No.
The whole idea of this unemployment created by AI, it's not happening yet.
No.
It certainly may happen, but it's not yet. That's important. And what it means is rates are now, having been on the decline in the US, there's a little bit of inflation coming out of the war in Iran, but this stronger economy story is now going to see rates potentially go up there.
Yeah, a rate hike is now priced in. If you just went back to February, 3 rate cuts in America have been priced in. So similar to our economy, there's been a U-turn there, probably for better reasons, I would say, in America than in Australia. But the other X factor here is we have a new Fed governor, Kevin Warsh, who is
the White House selection, of course.
The White House selection. There's a lot going on in America at the moment. Donald Trump, it's the 250th anniversary of America. Trump wants a $250 note and he wants his face on it.
Yep.
Warsh has actually indicated he will change legislation to allow a living president to be put on a note for the first time in US history. So the market at this point is trying to work out, Trump obviously wants low interest rates.
That's why Warsh is there.
That's why Warsh is there. Is Warsh Trump's lackey, or is Warsh going to, because he's very well regarded in financial markets, was he the lackey to get the job and then he will take his own path? I think this outlook for rates is going to be really volatile as well. Because we're trying to work out.
And now personality driven. That's
completely.
So it'll be fascinating watch. But again, a strong economy with rate cuts they had last year, you can see that there is a case for some normalisation. And it's, as you said, based on really important stuff. The economy's going well and companies are going well. So now the currency here has been relatively strong against the greenback. That did come back a little bit there and relatively... that's quite material, I think, Ben, for what it means for investors and for the economy as a whole.
Well, look, it's the argument for having, aside from very specific times in history, for having unhedged exposure to the US market, because when you do get those nasty nights like on Friday, you also 9.5 times out of 10 get a nasty night for the Australian dollar, and the returns are insulated. The drop is insulated, but we in Australia we've seen a weaker than expected employment report. We've also saw a monthly inflation number which are volatile, and the RBA doesn't pay. The quarterlies are the big ones, but they're weaker than expected, and so our rate outlook has probably ameliorated somewhat. It's probably looking a bit flat now. The US rate outlook has changed, and that's what's seen this drop in the currency.
Okay, time of year, June, what do we associate that with? There's a lot going on. People have been cogitating the budget for a few weeks, some things they need to do before June, and they do need to speak to their advisors about contributions. Pension
taking your pension payment. I hope you're on top of that, Jeremy.
Always at my age. And overall, Ben, tax end of year, tax loss selling, something you tend to see.
A bit of that.
Change in the market, don't you?
I think the one thing we've been probably just saying to clients, if you've still got room in super with these changes, which aren't legislated yet, but I think certainly what we can see is that building up your super balance at an earlier age than potentially you might have done in the past is making more and more sense.
The alternatives are less favourable than they were, and super was always a good idea. So super was actually a winner from the budget, wasn't it?
It was.
So, and that's the piece for everybody, if you haven't been chatting to your advisor too, because you want to maximise that.
And you've got to start younger.
Sooner,
and you've got to start sooner. So I think that's a bit... it will be a change in our advice is looking at that at an earlier age and maybe going a bit harder into it at an early age, if you've got the financial capacity to do it, of course. But I think you've got a window now until the end of the year to get some money into super, and potentially a big window if you could do a 3-year or something next financial year. But obviously make sure you've done your pension payments. We're here to help if you need them. The deductible super cons are a no-brainer. If make sure you're maximising those, they're the big things. Yeah,
great. Alrighty, well that's all we've got time for as we come into the June period, and we'll look forward to bringing you another update next financial year.